Episode of our Trading Week Ahead broadcast coming at you live here on Saturday, the 23rd of January, 2021. We have earnings up to bat next week, and so it's going to be a very volatile gap up, gap down, gap up and down market. So for that reason, cash is king, and you may want to focus a little bit more on day trading than swing trading because of the risk of overnight gaps, right? During heavy earnings season, whoever gets taken the most seriously by the street will gap the market collectively. They'll gap the market up or down. So, and you know that, right? If you're like me, you've been on the wrong side of overnight gaps, and it's very frustrating to wake up and see something that had been, $21 a share, now $20 a share the next morning. Now it can work the other way in your favor, but we don't want to gamble. We want to play it safe. So just be aware that next week is a heavy earnings release week, particularly starting Tuesday. So what I'm going to do, the way that I'm going to manage that is I'll do more day trading next week. I'll still have small positions in cash, and I'll scale in for the ones that work out, but I'm not going to hold a lot of size overnight because the earnings release is going to gap the market up and down, right? That's the most important thing I'll tell you this week that nobody else in the world is going to tell you, but I know how to trade. So during earnings season, you don't hold large overnight size because that's gambling, right? And we don't want to gamble. We want to make money. Now let's take a look at that wacky S&P. Boom. Big breakout. We have 3,800 obvious support. I'm going to use just under 3,750 as major support and just over 3,860 as resistance. Now the S&P has been dramatically running up here, and it's, as many of the commentators have been saying on financial news TV, the market's frothy up here, but it's still in an uptrend unless we lose the previous support level. I would use a loss of this red candle right under 3,750 as a decision to, I'll tighten up trailing stops on the swing trading positions I'm in and flip into inverses or short the market if we drop under there. And let's take a look at some of the story stocks as of lately. GameStop has been one that's been in the news quite a bit, and you can see in the intraday chart, it goes a little something like this. Boom. Anyone else trading GameStop? I alerted my members to it yesterday, and for proof, you can see here, one thing that my chat room members get that nobody else in the world gets is what I cleverly call this my answer key of the day. And it looks like this. I alerted my members for an initial entry at 44.7 way back here. An initial exit at 45.7. Then I called the long over 46 and 48 again. Anyway, ahead of the bell or in real time, I will always pick not only the top, 4, 5, 6 stocks that are running, but specific areas above which you'd want to look for an entry. Okay, so I alerted my members to GameStop yesterday at 44.7. Only good for 30 points, right? So how much money could you have potentially made? A big booyah, boom, buy, until it's time to sell on the way back down. But GameStop was a rock star chart and absolutely will be in play next week. Even if you trade light share size, even 10, 20, 30 shares, you still could have made a bit of change there. Now this pattern is called the mean reversion pattern. That simply means something that reverts or pulls back to the mean or the X bar, the average, right? That's where a chart runs up from support all the way up to resistance area, and then that's wave 1. Wave 2 is the pullback to just around half, right? It runs up, it pulls back down to half, and then it bounces and chops around. So that's a mean reversion pivot. The number one most common pattern that I teach my traders in the live room, in addition to cup pattern breakouts. My colleague Steve Nissen always reminds me I should explain for those of you, because we've got a lot of new traders here too. Got a big epic turnout, right? We've got this is called social proof. Now I don't have 6,400 people in the room right now. Got a big turnout here, but that's how many have registered. So anyway, these are popular Saturday events. And anyway, barky dog out there. The point is, this is a cup pattern. It looks like the letter U, or like the coffee cup. If I had one of those old school 1950s diner style ceramic coffee cups. We wait for it to get above the previous high. You don't anticipate a breakout because that's how you get stopped out. Often, you might say buy the first sign of a bounce and then get stopped out. You want to wait until buyers with high volume come in at a cup pattern breakout. And that's a very simple, basic strategy that I teach daily in the live room. The trick is knowing when to get out before the market takes the profit back. So we teach how to do that in the live room as well. But anyway, I called it yesterday for my members at 44.7. Does everyone see these? This is the tickers. We covered more than this, but this was the starting list of tickers that we covered 6 that had really good trade potential, anywhere from $6 a share up to 50, 60 a share, like NEO and OBLN and SunPower and whatnot. So really good charts to work with. And so you get specific entry and exit calls, unlike any other room out there where they just randomly talk about charts. That's not how to learn how to day trade. That's just talking head commentary. What counts is the specific entries and exits. Anyway, let's get on with it. Next up, 3D. One of my traders, Wendy, had alerted us to this one way back on that first spike, the first day that it ran up from 12 to 25. And she's really smart. So thanks, Wendy, if you're out there. This is another cup pattern, right? See the little letter U. Right above lucky number 13, and skyrocketed on up to over $30 a share in the matter of just a couple of weeks. And intraday ran up 10 points from 13 to just over 23. So 3D's been a real firecracker of a chart and maybe good for more. We'll see. Now, who can tell me this pattern? This is Tesla. I would use what? 800 as support, 900 as resistance. Now I called the top on it back on the day, on the exact top day. I told my members this was going to be the top for now. Anybody can tell me what this pattern is? Hey, Vincent, how you doing, man? Hey, Pete. Hey, Sharon. This is what's called a pennant pattern. And often it's not a sign of selling yet, but if Tesla loses 800, watch out below. The reason we call this a pennant pattern is, I used to call it the Loch Ness Monster pattern because it looks kind of like a dragon, right? Kind of like the body of the dragon and there's a little head. I think that's a little more imaginative than a pennant, but okay, it's a pennant. Runs up and makes a pointy pennant. It'll either break to the up or the downside. With this much volatility in this instrument, I think it's due for a beatdown. I would, and again, not a trade recommendation, but I think it would be a short if it loses 800 a share. It could keep on running up to 1,000. Like they say often, the trading graveyard is littered with the bones of would-be Tesla shorts. So proceed with caution. But personally, I'm looking to short this if it loses 794. Remember I said that next week. You know how good my calls are if you've been with me any length of time. If it gets under that number, and I'm going to use it's going to bounce around near 800 if it drops, and so we wouldn't want to short right there because it may go down and false breakdown and bounce back up. But if it gets under 794, that's where I would short it with a cover stop around 810. And if it breaks out, maybe worth a shot over 900. But personally, something that's gone from 100 to 900. It may be due for a pullback back to this moving average line to 600, 650. So that's good old Tesla. Another good chart to look at is Freeport McMoran, FCX. The reason now it's in consolidation up here, right? So I don't want to touch it. I'm not going to trade it unless it breaks 33. But it's widely thought that China likes copper. And so for that reason, the copper mining companies like Freeport, this one, FCX, have skyrocketed up from $6 a share to 30. So times 5. Could have made some money if you'd been patient enough to trade it on the way up. Maybe due for a pullback down here. So I'm not going to play with it yet. But if it does, don't play with your food as a trader. Wait until it's tasting good and it's got volume confirmation up at new highs. You don't want to speculate when it's inside a range. You want to wait for it to get above resistance, and to avoid a false breakout, you want to learn how to set your entries correctly. And I teach that in the live room, right? And that's over at a brief commercial announcement here, brought to you by all my friends at trademastery.com. That'd be me and my family. But anyway, trademastery.com, our chat room meets 5 days a week, and we cover both swing and day trades at trademastery.com live. You can try it for a couple of weeks for just $29. Really popular, a lot of new members this past week, so welcome aboard. One thing for all of you who are new, and we'll get right back to the charts within 30 seconds, I promise. But you can look at me talking at you here. But I do have an Instagram feed of examples of charts of alerts that our members got as recently as this past week. And I'm going to update that this weekend. Every single week, you can come back to this page and see updated examples of chart alerts that I gave to my members. And that way you can take a look not only at the types of instruments that we cover, but get some ideas for your own trades too. So it's a good resource. It's free to look at the charts on this page. And if you want to join the room, you can try it out for just 29 bucks. And again, even if you've already tried it, I will let you retry it. Normally, I only allow one trial per person, so people don't just keep trying to retrial it. But because I've updated the format of the room to do a lot more on swing trades and stocks under $10, like SENS, back on the 18th, a few days ago, I called this guy long at $1.82. Back when it was down here near $1.70, I said, we go long over $1.82. And it promptly ran all the way up to just under $3 a share. So really good breakout there. Anyway, so that's the chat room that I urge you to. You can still type in tradingtheopen.com and it'll forward you over here. But I put the chat page in our newly updated website at trademastery.com/live. So anyway, back to it. Let's take a look at some other charts. FCX is good, and NEO's been on the radar for most active traders for weeks and weeks, if not months. I've been calling along for my traders the last couple of months, right over the 20, and it ran from 20 to 60. So this is NIO. A lot of the alternative energy and electric vehicle plays like Plug and the rest of it have been really good candidates for active traders. Now, when it comes to swing trading, here's a quick educational tip. It's very useful to use the 90-day daily candlestick chart and look for patterns that repeat themselves, things that are running up. For example, SM is a chart that I'd called an alert for quite some time ago once it broke over the moving average lines here. Now, this is a bearish shooting star, so we wait until it gets above that. The trigger on this, I think, was just around 4.25. Now here's a quick lesson in patience, right? I was looking to trade this right over the 4. One thing that happens oftentimes in swing trading, one of the challenges that occurs frequently when you swing trade, meaning keeping a stock for several weeks up to a month or two, but usually several weeks, 3 or 4 weeks usually, is that things will break out and then fake out and pull back. And then frequently you may be tempted, as I often am, and still do to this day, like I did with Tilray earlier, selling to 1520. You get out at the first sign of a pullback, and then you miss the major run. So what you want to do to solve that is to make sure that you have a predefined stop loss level and split your trade in two. Instead of making an all or nothing trade, sure, go ahead and take profit at the first sign of a pullback on half your shares. Like let's say you're long 400 shares. You sell 200 shares at the first sign of trouble, but still keep a protective stop under your initial entry of 20, 30 cents for the remaining shares, and do your best to not to get shaken out of the trade. And then once it does make a bearish reversal pattern, for example, here's what's called a bearish engulfing, that would be a sell signal here. Then a rebuy would not be until it took out new highs over here, and so forth and so on. So anyway, there's another bearish engulfing. Be sure to learn these patterns on candlesticks, my colleague Steve Nissen at candlecharts.com. I did, and they work extremely well. So thanks to Steve, as always. I worked with Steve for 20 years, 21 years now, 20 years, something like that, since the year 2000. So use the candlestick patterns. And importantly, make sure you've got a trade management, a risk management, risk mitigation plan, so that if it starts to go against you, you don't have to panic out of all the shares, but do start to lighten up. And the way that I do that is use a 2-day chart. For example, let's take a look at this guy. This was a good play that one of my members in the live room had mentioned yesterday. And thanks to whoever mentioned that, CCIV. I got so many smart members in the room. A really good team effort. And anyway, CCIV did an end of day run, right? A mean reversion pullback and an end of day spike up to 22 a share. Now it's got lots of range, right? Oh, thanks. Hey, Dan. Hey, Ned. Hey, Rob. A couple of charts in the clean energy. Right. Yes, Sun. A lot of good ones. Right. Thanks. So yeah, volume is there. So anyway, CCIV is a good example of a chart with spectacular breakout potential. However, it would be a little risky to swing trade because of the range. Some stocks are good for day trading only. Some stocks are good for swing trading only. The best charts are a combination of both. But frequently what you'll find is that charts with wild trading ranges make spectacularly horrible candidates for swing trades because they often will pull back to the middle of the trading range. So I did not buy this into the close. I was tempted, but I'm not going to hold anything that had been 17, 18 a share running to 22 over a weekend because it may well gap down to 20 come Monday morning. So knowing the difference between charts that are good for swing versus day trading is another critically important trading skill that you'll learn as a member of my chat room at Trade Mastery. Because I like to teach traders the difference, not only with my own real money trades that I frequently show examples of, but also the difference between effective breakout momentum strategies as they're breaking to new highs and deciding the difference between day or swing trading. So here's another good pick from one of my members, SunPower, SPWR. This illustrates the concept of day over day breakout strength, like 3D did lately too. I'll take a look at that one in a second. But SunPower, I think that was from Felix, a really good breakout chart. He asked me about it on Thursday, the 21st, and you can see it ran from 38 to 44, 6 points of range. Yesterday ran from 41 to 47. What is 47 minus 41? 6 points of range. It's kind of like an optical illusion, but the trading ranges are the same both Thursday and Friday. And if you use the average true range, also known, abbreviated as the ATR, or the average true range, you may want to see some of my articles in Stocks and Commodities on the topic of this and other volatility patterns. Expect that be keenly aware of the previous day's range. Range is everything to a trader. The bigger the range, the better, particularly if it's like a 6-point range on a $40 instrument, or a 2-point range on a $3 instrument is great. What you don't want to do for day trading is things like Apple, where it's way up at like 130 a share and it's got a 4-point range. You want charts with big ranges but low prices, and high volume but consistent breakout patterns that aren't pop and drop. So this is a really good example of another kind of chart that you'll learn about as a member of my live room. All right, these are good, honest charts. They're hopefully makes perfect sense in terms of why these, why now, why these make for optimal trade setups as opposed to some of the others that are out there. You don't want to trade penny stocks or cheap pop and drop stocks as a rule of thumb. It's better to trade instruments with consistent breakout patterns. This one's a little choppy. Has range, not chop. This one, I called along for my members yesterday, right at the breakout trigger point, and this is another example of a cup pattern, right? Everybody see the bullish cup, and you get the handle. Often you get the shake, a consolidation at the right side of the cup, where it goes up and down a little bit in a tight range. And then we go long right above that congestion zone, and boom, it ran up from 59 to 61.5, and then promptly went sideways after around 10:30, 11. But this is a good example of a cup pattern accompanied by what's known as an open range breakout, ORB, open range breakout. Three patterns to learn: cup patterns, gap continuations, and open range breakouts. And then within charts, you look for things like mean reversion pivots and bull flags, bull coils, and the rest of it. So, but anyway, spectacular volume and volatility in NEO. Ran from 57 pre-market to 62, a 5-point run. So one could have done well with that. And those are the kind of charts I want you to spend a little bit of time on as you're looking for volatility. Now, if we zoom in on the S&P, Actually, let's look at the spiders ETF. Same chart, but you get the pre-market data with it. What's the story of the stock market? Let's wrap up by zooming in. And if anyone has any questions about the chat room, let me know. If you have any trading related questions, bring them to the chat room and I'll be happy to answer. If you have any questions about charts you'd like me to pull up, I do that also in the room for my members. I don't do that for free because I ain't a socialist, but dagnabbit, I get paid for my knowledge because I'm an expert. But I am happy to answer questions about the chat room and the features and how it's different than it's been before. We've expanded it because there's so many new members. It's been quite the run. So if you have any questions about chat, feel free to ask. And if you have any trading related questions, bring them to the room as a chat room member and I'll be happy to answer them for you in detail too. So this looks like a bullish breakout, right? One thing that helps is to do what's called a multi-time frame analysis, like I've been doing right here for you, is click through the dang charts. Now, for years, I always used the 10-day chart. And in the 10-day chart, what you want to look for, and this is true for equities and ETFs that you trade as well, look for common themes and make decisions based on what you see. So one thing you want to do is always mark out visual support and resistance. Whatever you do, don't trade what's obvious because that's where you get false breakouts and fake outs. So I'm trying to draw this thing here. I got a new mouse. It's a good mouse, a new Logitech gaming mouse. I'm still getting used to. Anyway, that's the line in the sand for the S&P right there at 3810 in the S&P or 381 on the spiders chart. So it did a bullish cup, right? Did a gap up, kept a little bullish cup here. It gapped up, bullish cup, gap up, bullish cup breakout, ran all the way up here, chopped around, gapped down yesterday, did what I call a bear trap, because I bought some inverses here against my better judgment. I always tell myself, don't buy inverse instruments pre-market, wait until end market, and that would have been the right decision. But off the top here, it's still pulling back. So we're still in a little downtrend here off the top. Now, the one thing that's going to drive price action, we're solely focused on price action. You will never hear me in the live room talk about news. Like, why did it gap up? I'll say more buyers than sellers. I'm not going to say, well, we had positive news because of a China trade deal and blah, 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 blah. No, we're not talking heads. We are traders. We're price action traders. All that matters is price. All that matters is the money flow, and the technical chart patterns to help us make better trading decisions more intelligently. So what's going to drive next week's price action is earnings releases. And like I said, it's going to be all over the map. You're going to get gaps up and gaps down. So it's good to stay clear if you're swing trading or trade very light size and scale. But whatever you do, at least what I'm telling myself, what I'm not going to do, I'm not going to put on large size overnight because that's a gamble. It could gap up or down. It's fine for day trading, and it's an ideal time to do a little more day trading than swing trading next week because the impact of earnings on gaps that are going to impact the market. Now, this is a bullish pattern. It's, again, it looks like a Loch Ness monster, a dragon's head, right? It looks like this is the tail, this is the body, this is the neck, this is the head. You can draw a little eye here and a little mouth here and a little smiley face. Anyway, it's a wedge pattern above a cup. So we've got a cup pattern with the bullish cup and a pennant up at the top. That's a bullish pattern if it spikes above, in this case, over 385.50, right? And in earnings, let's say we have an earnings miss on Monday and the market ends the day down at 377 or so. Then we get a lot of earnings hits. Maybe we get earnings beats of 20% or better. That's, by the way, the number the street's looking at is 20% delta on earnings beats. If a majority of the companies beat, if they're significant large market caps, large caps of 20% or better, then we're likely to see gaps up on the following day. So we might get a gap up to 386, 387. And then we may pull back down into this range the day after. So it's going to be a very haphazard week. And you do not want to try and navigate those waters on your own. You'll just get into trouble. Instead, you want to work with me in the live room, and I'll give you my best take on what charts have the best trade potential and a trading plan of attack that makes sense for the current market situation. Anyway, it's a bullish pattern unless we get under and stay under 381. Now, it's widely thought that the market's kind of frothy and it may drop. So for that reason, we want to play it safe for swing trades. Again, it's more a day trading market right now because the market's so overextended, and you hear the talking heads are talking about, it's frothy. Do we want to pay up here? Are there any good values for stocks? Are the earnings or the valuations way overdone, like Tesla, right? Or Plug or Neo or whatnot. So for that reason, play it safe. Anyway, good chart pattern. We'll see where they go next week. All right, what else do we have to wrap up with here today? The quick trading tip is SCO. That's a pretty horrible looking chart, but short crude, because apparently the Biden administration is not favorable to fossil fuels. What a shock. They want everybody to drive cars that are electric. Anyway, my point is short crude oil on a Biden administration. I correctly called it the day after the presidential debates back before November, when Biden said he wants to do away with all oil and fossil fuels. The correct call that I made was, well, then we'd want to short crude by buying the SCO ETF. It's an exchange traded fund called SCO for short crude oil. So this may be a good pivot play if it bounces, right? And that's strictly on a Biden, wants to get rid of the pipeline and thousands of jobs, and let's let them get new jobs. Let's let them fix batteries in electric cars and all that crap. Anyway, don't let me get started on politics and financial transaction tax and socialism and all that kind of stuff. But the point is, the trade play, you got to think ahead. Be smarter than the average bear. Try to make money. Buy. If crude oil takes a hit, the short crude oil ETF, which is how to play short crude, will spike. You see back in March and again in May last year was up at 60 a share. Now it's only 10 a share. So there might be some upside potential in shorting crude on reaction to the Biden administration's actions of trying to kill the crude oil industry. So you can see it's been a little uptick here, nothing really exciting. I'm going to wait till it gets over 11. I'm already in a little bit. I bought a little yesterday, but I'm going to buy more if it gets over. I'm going to be cautious right here, but if it gets over $11 a share, again, not a trade recommendation, but I'm going to scale into crude. Spiders are up. We also have some bounce potential in some of the inverses as well. Now the NASDAQ has been up, as has the small caps. The Russell and NASDAQ have been up, so the inverses are down, but they do make sense to keep an eye on. And if you look at charts like yesterday's big run in 3D, let's take a look at the 2-day chart. We're going to wrap up with this. A quick thought here for intraday traders. Let's wrap up with some excitement here for our day traders. We pull up the 2-day chart. What around? I spotted it for my members here around 31, I want to say 31.30 or so. 3D had been running and it ran all the way up to 34. Charts like this are ideal because they've got range and they've got a volume and volatility. And if you just traded a few hundred shares, you've done really well with this one. So that's 3D, another good example of a big runner. And of course, GameStop was the chart of the day for yesterday. Anyway, do let me know if any questions about the live room. I'd love to work with you guys. You have my word, it's honest, it's step-by-step, it's explained. I like to give very specific entry and exit calls using my alerts table approach. And that's how you can tell if an educator and a trader is an honest person, is if they can tell you ahead of time where would be good. And this is the exact call I gave my members 44.7 yesterday, right? Ahead of time, where's an entry, and then kind of a concierge hand-holding approach where I step-by-step walk you through the entry and the exit using price action and time and sales when we do tape reading. So really good chart, right? So that's in my Trade Mastery chat room. It's been a privilege to have so many of you here today, and we're going to wrap up soon. Wow, a lot of questions. Okay. Let me hit the stop record here, and I will answer a few questions, then we'll conclude and get on with our weekend already. All right, let's see.